The crypto market is always buzzing, and right now, Bitcoin and Ethereum are stealing the spotlight. Lately, there's been a lot of chatter about exchange-traded funds, or ETFs, and how they're shaking things up. Bitcoin seems to be getting all the love from traditional finance, but Ethereum, not so much. People are starting to wonder where it's headed. This split in opinion comes from a mix of things like regulatory issues, tech challenges, and overall market vibes, all adding to the ETF drama. Bitcoin, the OG of cryptocurrencies, is seeing a lot of big players jumping on board, treating it like digital gold. Thanks to this newfound respect, we've seen several Bitcoin ETFs get the green light, making it easier for investors to get in on the action. On the flip side, Ethereum's road to ETF approval has been a bit bumpier, with regulators throwing up roadblocks and tech concerns causing headaches. The recent performance of these two cryptos really highlights this difference. Bitcoin's price has been pretty solid thanks to institutional money and growing acceptance in the mainstream. Ethereum, while still a big player, has been more volatile and slower to bounce back. This shaky performance is partly because of the uncertainty around Ethereum's regulatory future, especially when it comes to ETFs. As the crypto market keeps evolving, the gap between Bitcoin and Ethereum's ETF prospects is likely to get even wider. Bitcoin looks set to become a mainstream financial tool, but Ethereum's future is still up in the air, depending on how it handles regulatory issues and wins over big investors. The next few months will be key in figuring out where both of these cryptos are headed, with ETF approvals being a major clue about their future in traditional finance. Section 2, Ethereum under scrutiny. Expert skepticism towards ETFs. The recent wave of skepticism towards Ethereum ETFs from prominent figures in the financial world has cast a shadow over the cryptocurrency's prospects. This skepticism is rooted in a number of concerns, ranging from the complexity of Ethereum's technology to the regulatory uncertainty surrounding its future. Unlike Bitcoin, which has garnered a degree of regulatory clarity, Ethereum's more intricate structure and broader range of applications have made it a more challenging prospect for regulators. One of the primary concerns raised by experts is the issue of market manipulation. Ethereum's relatively nascent infrastructure and the decentralized nature of its exchanges make it more susceptible to price manipulation compared to Bitcoin, which boasts a more established and regulated trading environment. This vulnerability raises concerns about investor protection and the overall stability of an Ethereum ETF. Furthermore, the regulatory landscape for Ethereum remains ambiguous, particularly in the United States. The Securities and Exchange Commission, or SEC, has yet to approve an Ethereum ETF, citing concerns about market manipulation, custody solutions, and the overall maturity of the underlying market. This lack of regulatory clarity creates uncertainty for institutional investors, who are hesitant to commit significant capital without a clear understanding of the rules governing Ethereum ETFs. Adding to the skepticism is the inherent complexity of Ethereum's technology. Unlike Bitcoin's straightforward design as a digital currency, Ethereum's smart contract functionality and its role as a platform for decentralized applications introduce a layer of complexity that many traditional investors find daunting. This technological barrier, coupled with the regulatory hurdles, has fueled a sense of caution among experts, leading to the current wave of skepticism surrounding Ethereum ETFs. Section 3. Bitcoin's ETF triumph, a stark contrast. In stark contrast to Ethereum's struggles, Bitcoin has witnessed a triumphant rise in the realm of exchange-traded funds, or ETFs. This success can be attributed to a confluence of factors, including Bitcoin's simpler technology, its established market presence, and its growing acceptance by regulators. The approval of several Bitcoin ETFs in recent years marks a pivotal moment in the cryptocurrency's journey towards mainstream adoption, providing investors with a regulated and accessible avenue to gain exposure to this digital asset. One of the key drivers of Bitcoin's ETF success is its relatively straightforward technology. As a decentralized digital currency, Bitcoin's core functionality is easily understood by regulators and investors alike. This simplicity contrasts sharply with Ethereum's more complex architecture, which encompasses smart contracts and a platform for decentralized applications. This difference in complexity has played a significant role in the divergent regulatory treatment of the two cryptocurrencies. Furthermore, Bitcoin benefits from its first-mover advantage and its established market presence. As the pioneer cryptocurrency, Bitcoin has had over a decade to mature, develop a robust infrastructure, and gain recognition from institutional players. This established ecosystem provides a level of comfort and familiarity for regulators and investors, contributing to the successful launch of Bitcoin ETFs. The approval of Bitcoin ETFs represents a watershed moment for the cryptocurrency industry, signaling a growing acceptance by traditional financial institutions. This acceptance stems from Bitcoin's ability to address key concerns surrounding security, transparency, and regulatory compliance. The establishment of regulated ETFs provides investors with a familiar and trusted framework to invest in Bitcoin, further solidifying its position as a legitimate asset class. Section 4. Voices from the Field Analyst. Perspectives on Ethereum's challenges. The challenges facing Ethereum in its pursuit of ETF approval have not gone unnoticed by financial analysts and market observers. Prominent voices in the industry have expressed concerns about the cryptocurrency's regulatory hurdles, technological complexities, and market volatility. These concerns, echoed by numerous experts, highlight the uphill battle Ethereum faces in gaining the same level of institutional acceptance enjoyed by Bitcoin. Ethereum's regulatory landscape remains a minefield, notes Michaël, CEO of Grayscale Investments, a leading digital asset management firm. The SEC's reluctance to approve an Ethereum ETF stems from valid concerns about market manipulation, custody solutions, and the overall maturity of the underlying market. These concerns, Sonnenschein argues, present significant obstacles for Ethereum in its quest for ETF approval. Adding to the chorus of caution is Cathie Wood, CEO of ARK Invest, a firm known for its bullish stance on disruptive technologies. While optimistic about Ethereum's long-term potential, Wood acknowledges the challenges it faces in the near term. The regulatory uncertainty surrounding Ethereum ETFs is a major hurdle, she states. Institutional investors crave clarity, and until that clarity emerges, Ethereum ETFs will likely remain on the sidelines. The skepticism from industry leaders like Sonnenschein and Wood underscores the challenges facing Ethereum. Their insights highlight the importance of regulatory clarity, market stability, and technological maturity in gaining institutional acceptance. Until Ethereum can address these concerns, its path towards ETF approval will likely remain fraught with obstacles. Section 5. Grayscale's Influence, a Tale of Two Cryptocurrencies. Grayscale Investments, a leading digital asset management firm, plays a pivotal role in the cryptocurrency ecosystem, offering investors access to Bitcoin and Ethereum through its Grayscale Bitcoin Trust, GBTC, and Grayscale Ethereum Trust, ETH, respectively. However, the performance and perception of these two products highlight the divergent paths of Bitcoin and Ethereum in the eyes of institutional investors. GBTC, launched in 2013, has emerged as a popular choice for investors seeking exposure to Bitcoin. Its structure as a trust allows investors to gain exposure to Bitcoin's price movements without directly holding the underlying asset. This accessibility and familiarity have made GBTC a preferred vehicle for institutional investors, contributing to its substantial assets under management. In contrast, ETH, launched in 2017, has faced a more challenging journey. While ETH provides similar exposure to Ethereum, it has not garnered the same level of institutional interest as GBTC. This disparity can be attributed to the aforementioned concerns surrounding Ethereum's regulatory uncertainty, market volatility, and technological complexity. The divergent performances of GBTC and ETH underscore the importance of regulatory clarity, market stability, and investor confidence in the success of cryptocurrency investment products. Bitcoin's established market presence and its relative regulatory clarity have made GBTC a more appealing option for institutional investors compared to ETH, which faces the headwinds of Ethereum's uncertain regulatory future. Section 6. Looking ahead, future trends, and the ETF horizon. As the cryptocurrency market continues to evolve, the future of Ethereum and Bitcoin ETFs hangs in the balance. While Bitcoin appears poised for continued growth and acceptance in the traditional finance world, Ethereum's path remains uncertain, contingent upon its ability to address regulatory concerns, enhance market stability, and gain the trust of institutional investors. The recent approval of several Bitcoin ETFs signals a growing acceptance of cryptocurrencies by regulators and traditional financial institutions. This trend is likely to continue, with more Bitcoin ETF applications expected to be approved in the coming months. This influx of institutional capital could further bolster Bitcoin's price and solidify its position as a mainstream asset class. Ethereum, on the other hand, faces a more challenging road ahead. The SEC's reluctance to approve an Ethereum ETF highlights the regulatory hurdles that still need to be overcome. Until these concerns are addressed, Ethereum ETFs will likely remain on the back burner, limiting the cryptocurrency's appeal to institutional investors. The future of Ethereum and Bitcoin. ETFs hinges on a multitude of factors, including regulatory developments, market trends, and technological advancements. While Bitcoin appears to be on a path towards mainstream adoption, Ethereum's future remains uncertain, contingent upon its ability to navigate the complex landscape of regulation, market dynamics, and investor sentiment.